Hello guys, today we will discuss about accounting for merchandising operation. And warm greeting to each of you. My name is Mira, and today I will talk about accounting for merchandising operation. At the end of this presentation, I hope you understand how to record business transaction in a trading company. In the first part, I will explain the meaning of merchandising inventories, sales revenue, and cost of goods sold. There are slight difference between trading companies and service company. What is merchandise inventory? Is an inventory of merchandise used by company and is part of current asset. Current asset themselves are asset company that can be converted into cash in a short time. What about sales revenue? Sales revenue is the main source of income for trading companies. It's through sales of merchandise or merchandise inventory. The result is called sales revenue or sales. And lastly, we can't forget about cost of goods sold. Cost of goods sold is represent all expense incurred of up to good ready for sales. How to calculate income in a merchandising company? In this discussion, there is an example of an income statement for company XYZ ending December 31 years XX. Based on the example, it can be seen that gross profit is obtained for net sales minus cost of goods sold, where net sales is obtained for sales revenue minus sales return and allowance and minus sales discount. And then gross profit minus operating expense, such as salaries expense and advertising expense, obtain net income if the result is a positive, or net loss if the result is a negative. Inventory recording system. The inventory recording system is divided into two. The first is the perpetual system and the periodic system. So what is the difference of perpetual system and periodic system? Let's discuss it together. Number one, perpetual inventory system. The company remains on record detail cost every purchase of inventory or inventory sales. Continuous login will be show the amount of inventory remaining, so it cannot at all times. The company records cost of goods sold every time a sales occurs. Number two, periodic inventory system. The company doesn't detail inventory record remaining in each period. The company took note cost of goods sold only at the end accounting period. Freight cost. After knowing what an inventory recording system, next we will discuss freight costs. Freight costs are divided into two, namely FOB shipping point and FOB destination. So what is the difference between them? Number one, FOB shipping point is a transportation cost borne by the buyer. Number two, FOB destination is a transportation cost which borne by seller. Recording purchase transaction inventory in merchandising company. Merchandise purchase transaction. It will be recorded in the perpetual system as merchandise inventory on debit. Meanwhile, cash if purchased in cash, or account payable if purchased in credit. Whereas in the periodic system, that will be recorded as purchase on debit and cash or account payable on credit. Pay transportation costs. In the purchase journal for merchandising company about freight costs will be journalized transaction only for FOB shipping point, whereas the FOB destination won't be journalized in the purchase journal. The transaction will be recorded in the perpetual system as merchandise inventory on debit, and cash will reduce on credit, while in the periodic system will be recorded as freight and on debit and cash on credit. When returning merchandise purchase, it will be recorded in the perpetual system. Cash will increase if purchased in cash, or account payable if purchased in credit will decrease on debit, and merchandise inventory. Inventory will reduce in credit. For the periodic system, the same as the perpetual system in the debit section. The only difference is the account in the credit section, namely purchase return and allowance. By within the discount period, in the perpetual system will be recorded as account payable on debit, while the merchandise inventory and cash on credit. And for the periodic system, the same as perpetual system. The difference is on the credit account, where merchandise inventory are changed to purchase discount. Pay outside the discount period. For this, a transaction will be recorded in both of perpetual system and periodic system as account payable debit, meanwhile cash is on credit. Okay, regarding sales transaction, inventory, and merchandising company. For transaction selling merchandise, for this transaction in the perpetual system will be recorded as cash if sold for cash, or account receivable if sold for credit. Will be increased on debit, and sales revenue will be decreased on credit, and then cost of goods sold on debit, and merchandise inventory will be reduced on credit because inventory has been sold. In the periodic system will be recorded as cash, or account receivable will increase on debit. Meanwhile, sales revenue will increase to credit. Pay freight costs only for FOB destination, but of perpetual system and periodic system will be recorded as freight out on debit, and cash will reduce on credit. During sales return transaction, both of perpetual system and periodic system will be recorded like sales return and allowance on debit. Meanwhile, cash or account receivable will be decreased on credit, but there a little different for perpetual system. You must to add account like merchandise inventory will increase on debit, while the cost of goods sold will decrease on credit. Receive repayment within the discount period, both perpetual and periodic system will be recorded SMS, cash, and self-discount on debit, while the account receivable on credit. Receive repayment outside the discount period. For the transaction, both perpetual and periodic system will record SMS will increase on debit, while the account receivable will decrease on credit. Okay, after we'll learn about how to journalize the transaction for a merchandising company. how we continue to completing the case study about journaling in the merchandising company. There are questions that must be solved correctly and precisely. Tirta Start is a merchandising company that sells various kinds of notebooks. Tirta Start provide credit facilities with terms 2% per 10 days and per 30 days for our customer. Here are some transactions during July 2022. Okay, number one, purchase merchandise in the form of book on credit 50 pages at $30,000 with cost at $25,000. First of all, we journalize the transaction as a virtual system. So this transaction will be recorded like merchandise inventory will increase on it and account will increase on it by $1,500,000, and then we have to journaling the freight cost as merchandising inventory on debit while cash on credit by $25,000. Number two, selling 20 books to Galaxy Ltd on credit at $30,000 with cost 24 at $25,000. It will be recorded like account receivable on debit and sales revenue on credit, but each will increase by $600,000 because it uses a perpetual recording system. So we have to journaling the cost of goods sold and debit while the merchandise inventory on credit by the amount of $500,000. Number three, five item purchased from Gray Ltd were returned PC because it's damaged. This will be recorded as account payable will reduce on debit and merchandise inventory will decrease on credit by $115,000. Okay, thank you for attention. Bye-bye.